if you're looking to house hack a property, you can oftentimes get up to 4 units using down payment assistance, live in one of them, and then rent out the other units. So I think down payment assistance and house hacking goes hand in hand. What's up, everybody? My name is Lili. Welcome back to the channel. This is where I'm documenting my real estate investing journey and sharing everything that I learned with you guys. And oh my goodness, I learned a lot when finding out how to put $0 down on a house. What I'm going to talk about today is what I used when purchasing my duplex, and it enabled me to put literally $0 towards my down payment. Now, this is not the video that says, hey, if you have no money in your bank account, go do this and invest in real estate. Being a homeowner costs money. Investing costs money, but this video is going to show you the concrete steps you can take to invest in real estate and not make a down payment. Without further ado, let's get to it. So what is down payment assistance? It comes in a lot of different forms. Now, grants are oftentimes gifts. They don't have to be paid back. There's no interest associated with them, although there are sometimes guidelines that say if you sell or refinance within a certain number of years, usually 5, then you will have to pay back that loan. But those guidelines are only in extenuating circumstances, and oftentimes it's quote unquote free money. Oftentimes these loans will be what we call silent second mortgages. When you sell the house, there's going to be no interest associated. What you got is what you'll give back to the program. That kind of helps them replenish their funds so that they can give down payment assistance to the next person. So if you have a silent second mortgage, basically if you got $10,000 worth of down payment assistance, when you sell that property sometime in the future, you pay back $10,000, no interest associated. These different types of down payment assistance oftentimes come with different types of interest rates, which we'll talk about at the end of this video when we get into some of the drawbacks that might come with using down payment assistance. So one of the common misconceptions about using down payment assistance is that you have to have really, really low income, that you can only buy a really low cost property, or that it's really hard to qualify. And that's actually not the case. A lot of programs do say that they are for first-time home buyers, but the way that first time is defined is if you have not bought a property to live in yourself in the last 3 years, you qualify as a first-time home buyer. So that opens up the net a lot wider than a lot of people may think. Another big question, kind of the main question, is how much can I get? So there's a recent study of 513 different counties, and they found that over 80% of people got down payment assistance, got around 3%. And this included large markets like New York City, Salt Lake City, Baltimore, and other areas where property prices are pretty high. But what about the usual, you need 20% down to put on a house? Does that mean that you'll get 3% assistance and 17% you'll have to come up with yourself? No. This is a big misconception around home buying, that you need 20% down to put on a house. On average, first-time home buyers put down just 6% and repeat buyers put down around 16%. Also, as houses get more and more expensive, it becomes harder and harder for people to save up the down payments that they need to buy these houses. And in that same study of 513 counties, they found that a 3% down payment represents 14% of most people's annual income. So down payment assistance can really make a difference. They found that on average, almost $6,000 went towards home buyers for their down payment, but they were also able to save over the life of their loan almost $11,000 more dollars, because with that down payment assistance, they were able to owe less on their mortgages and lower monthly payments. So how do you qualify? Different programs across the country have different guidelines, but they all follow kind of the same setup. And so we're going to look at 3 different programs, one in Los Angeles, one in Oklahoma, and one in New York City, to kind of get an idea of what you need to know in order to qualify to get this money. In Los Angeles, you can get 4% down payment assistance using FHA, VA, USDA loans, basically any type of loan. You can get 4% down payment assistance. And this particular program wants you to have a 640 minimum credit score and a 45% debt to income ratio, which basically means that the debt you owe every month in the form of bills or credit card debt is less than 45% of the income you make every month. Another thing to know about this program in Los Angeles, and something you're going to want to check on the program you research, is that they do require participants to take a homebuyer education course, which are oftentimes oftentimes free and oftentimes done online. So I don't think that's a really big hurdle getting in the way of you getting free money. When we look at the Oklahoma program, we can see that a same 640 credit score will get you either 3.5% or 4% down payment assistance. And here they specify that those funds can be used towards any of the money you need to close. They can be used for your down payment. They can be used for your closing costs. So let's imagine you were going to use a VA loan, which requires 0% down. You can use that full 3.5% or 4% to go even further than your down payment and use it towards your closing costs. When I looked at the New York City guidelines, I saw that it differed a little bit. They'll take a 620 credit score, but if you're using an FHA loan and get approval from your lender, you can qualify with even a 580 credit score. And rather than a set percentage, this program will give you up to $40,000 to be used for 50% of your down payment and up to 100% of your closing costs. So this program, while they're not offering to cover the entirety of your down payment, would cover a substantial amount of the money you're going to need to close on your deal. Another qualification that almost every single program is going to have is a maximum income level. In Los Angeles, you can qualify making up to just over $125,000 a year. In New York City, you qualify if you make up to 80% of the median income in your area. When I looked at the specifications for a family of 3, that would be about $75,000 a year. And in Oklahoma, $111,000 is the limit for a 2-person household and $130,000 is the limit for a 3-person household. So that all sounds great. You might be saying, all right, I can get the entirety of my down payment covered by this program. So can I just go out and buy a mansion? Unfortunately, the answer is no. First, you can't purchase any house that the lender doesn't already pre-approve you for. So if they don't think based on your bills and your income that you qualify for a property, down payment assistance is not going to change that. So in Los Angeles, you can buy property up to $453,000. If we look at King County in New York City, you can get a 4-unit property for just over $1 million. And in Oklahoma, they don't have listed maximum purchase amounts, but they do limit their properties to 1 or 2 units. So does all of this mean that I think down payment assistance is perfect for every single person? Absolutely not. And there are a couple of drawbacks that I want to talk about now. The first one is you may get down payment assistance that trades off with you having a higher interest rate on your loan. What that means is that some programs will say, if you take our down payment assistance, we're going to add 0.5% or 1%, or maybe even more on top of your loan amount. And that could raise your monthly payment to a level that you're not comfortable with. So it's all about running your numbers and understanding for your own situation, is taking that down payment assistance worth having a higher interest rate? Oftentimes, it's private programs that have that higher interest rate, and the government programs that come from either your state or even a federal level are going to have a market interest rate that is no different than if you didn't use the down payment assistance. So those are the ones that I recommend you try to use first. Another drawback is that some programs do require you to take a home buyer education course. I don't think anything you learn in those programs is going to hurt you, and I think that the trade-off for spending a couple of hours taking a free online course is worth getting possibly tens of thousands of dollars towards the purchase of your investment property. So I think it's worth it, but for some people that is a big drawback. And finally, for me, I would never use a down payment assistance program that has interest that I have to pay back. I would only want to use a grant that is given to me kind of as a gift, or I would want to use something that has a silent second mortgage where if I hold on to that property for a certain amount of time, the loan is wiped away, or whatever I got, I just have to give that back to the program so they can send it to someone else whenever I sell the property. But I would never want to use down payment assistance that I had to pay interest on, because then it's just another loan. So there it is. That is everything that I learned about down payment assistance. If you appreciate this video, all I ask is that you leave me a like, and here's your chance. Is down payment assistance right for you? Check out the link below to find down payment assistance programs in your area, and let me know if you think it's going to help you get started on your investing journey.